everyone. Thank you for joining us at the Orange County SBDC webinar on understanding your financial statements. Welcome to the webinar this morning. I'm trying to take you to the next slide. About the SBDC, Orange County SBDC, we are providing small business consultant for startup, expansion online and traditional marketing with accounting, finance, QuickBooks, and international trade. Also access to capital, that's why you're here. We do work with startup businesses and existing businesses in getting you loans and lines of credit. We also have international trade, new to export or export expansion for companies. And we also provide seminars and workshops as you are here today. Our services at the SBDC is available in English, Spanish, and Vietnamese. I'm trying to move to the next slide. Okay. If you like to join our mailing list today, please text to OC SBDC and text it to 22828 so you can receive on our mailing list where you can see our next or upcoming events, business networking events, and all that good stuff. So please text OCSBDC to 22828. And also, would you please like us on Facebook at facebook.com/OCSBDC. We will also post our events and a schedule of our next coming workshops and seminar also on Facebook. My name is Katie Nguyen, and I joined the Orange County SBDC since 2000. I am here to moderate the webinar for today. If you like to speak to me or contact me, you can always call either 714-564-5200, or you can check us out on our website at www.ocsbdc.org. This is my first time moderating a webinar, and so if I talk too fast, please let me know so. This is the first time ever I work with a program without audience in front of me, and so I'm kind of rusty myself. I apologize for that. Okay, so we're here today talk to you about understanding your financial statements, and we are very lucky to invite the team from Axiom to talk to us and lead us in the webinar today. We have Jose Mende, who is the lending manager for Axiom. He manages the Intech team, which does the pre-screening for clients, as well as the team of loan consultants that lend to most states across the U.S. He has his bachelor with concentration in entrepreneurship and small business management, and an MBA with concentration on project management. And he's also teaching at teaching personal finance to high school students, and also founded and ran a successful daycare business in New York. Welcome, Jose. Please take it away.
Hey, everyone. Thank you. Can you guys hear me okay? Katie, can you hear me okay? I just want to
Yes, I hear you. Okay,
Okay.
and also I like to. I think I forgot to ask our audience if you like to have questions. If you have questions, please use the chat feature on the bottom, and uh, we will save 15 minutes at the end of the seminar today to ask Jose your questions. So please go ahead if you have any questions, raise them or write them in the chat feature so I can have them ready for the last 15 minutes of our seminar today to ask Jose about them. Thank you very much. Enjoy.
All right. Thank you, Katie. I appreciate the introduction. So I'm going to be talking a bit about understanding your financial statements. And before I get into that, I just want to kind of give you guys a glimpse of what a financial statement is in general. And I want to break that down into what we would consider formal versus informal typically in the lending world. And I'll be a little more specific as to what each of these mean throughout the presentation. But typically a formal financial statement is an income statement, also known as a profit and loss statement, a balance sheet, cash flow statement, taxes is, hello? Taxes is an instrument that's also used to provide some kind of financial information, bank statements as well. Okay. The reason I put an asterisk on those two is that oftentimes these can be considered informal depending on how complete or incomplete or transparent they may be. And we'll get into that a bit later. Typically what we see in the lending world is what an informal financial statements. Technically, they may not be called financial statements, but they are financial instruments that provide some kind of information as to the well-being of the business or what the transactions of the business are. So, for example, ledgers. A lot of times they're just handwritten ledgers of what goes in, what goes out each month. Invoices / receipts. And again, bank statements and taxes can oftentimes be informal if they don't really represent what's really going on in the business, okay? And then just something to know, and I'll go over that a little bit more. I wanted to just add it there, accrual versus cash base. That can change how some of these financial statements look, and we'll go into that a little bit later. Was there a question there or something, or somebody wanted to say something? Just a reminder, go ahead and do the questions afterwards, just because some of the things that you may ask now, I may actually be covering it. So make sure you write down any questions or just keep them in mind for later in case I don't cover it, okay? Now, who cares about these financial statements? Among other entities or people, typically potential investors, someone may be purchasing your business or you're perhaps purchasing a business, entities you do business with, lenders for both business and personal, accountants, and you should also care. And I'll go over into a little more details as to why these are typically entities or persons that should care about what these financial statements say. Before we do that, if someone could put their mic on mute, I think sometimes it kind of makes a little background noise there. So typical reasons people are not transparent, and that's a huge deal, especially what Axiom does is we're a microfinance organization. So we lend to small business owners throughout the country, and we are more flexible than conventional lenders like banks. As a result, we tend to have a bit more challenging clients or business owners, credit or lack of transparency, etc. So some of the reasons why a lot of times people are not transparent is the fear of the unknown. It's a bit confusing. You may have heard the saying, just because you know how to cook doesn't mean you should open up a restaurant. And the idea behind that is that you may be really good at what you do in your business. So you may be an excellent hairstylist, and that's great, but that doesn't mean you're the best at operating your business. And the numbers, the financial statements, all that may be a little overwhelming. And so a lot of times they don't see the need. The business owner doesn't see the need, or just doesn't understand it. It could also be there's no time because you're so focused on the business that you don't have time to really write down what goes in, what goes out in terms of cash of the business. A lot of times businesses are very cash-based, and so it just makes it a little more complex to see exactly what's going on with the business. A lot of times, believe it or not, you may have heard of this or not, but people fear they may have subsidies from the government, childcare or housing, etc. Scholarships for their children, etc., may be at risk because they fear that if they make too much, they may end up getting less help. And of course, a lot of people trying to avoid paying taxes. And we'll go over some of these in a bit as well. So a little going back to who cares about these statements. I want to talk a bit about the benefits of being transparent in statements. Number one is it is easier to get investors or loans, business loans. So if your business is at a point where you have huge major opportunity to really grow, and maybe you want to take on an investor, they're going to want to see the numbers. You may have seen that show Shark Tank, where at the end they do the nice presentation and everything, but then they want to get down to the numbers. What has it made? What do those look like? Because it really does speak to what the potential of the business is so far under your management. And so the statements speak to that, right? Is this a business that's really growing? Is there good profit margins? And lenders such as ourselves also look into that. We want to see what's going on, what's the true health of the business. And so to the extent that you may not be transparent with that information, that may end up hurting you. It's also easier to get mortgages or personal loans or credit because a lot of times, again, to avoid maybe paying taxes, you put that you make a lot less than what perhaps you really do. But when it comes time to maybe, you want to get a home, a house, you want to purchase one, they're going to want to see how much is it that you make from the business. And so while perhaps a business owner may have been thinking short term to avoid paying taxes, in the long term, because some of these types of loans look into maybe 2 years or even more of history of your income from the business, that may end up hurting you in the end. So you want to, look at this as a long-term way of financial wealth and well-being. It's also easier to win contracts. So for those businesses that perhaps, for example, work with major businesses or the government, for example. So if you do construction and the government, gets these bids out there and you want to benefit from that, they're going to want to see what the financial solvency of your business is. Will this business be able to afford, because perhaps they pay much later, will they be able to afford the, labor, the materials, everything, and not end up, not having any cash towards the middle of it. They want to see that you've been able to manage large amounts of money, and that the business is really, really has a good reputation, and there's growth seen there as well. It's also, this is very important, easier for you to see the true financial health of your business and what to do next. So these financial statements are not just numbers. These numbers should speak to you. They should, tell you, you should see what is it that they're telling you. What are some of the things you may have implemented this year versus last year, And is there, in the bottom line, do you see the benefit to that? Or in the bottom line, are you seeing less profit? So perhaps, you hiring these 2 or 3 new sales rep, do their cost, does their pay, is it justified based on the growth that you've seen? Or are you not making that much more money to justify having hired them? Are they bringing in enough to cover that cost? And the same goes for so many, other decisions you may have made. So these are things that you want to pay attention to. And when business owners don't, they may think they may be growing in certain areas, or they may be spending too much in one area, not realizing that there are better margins in another. And we'll go over that a bit also a little later. But it's really important for you to understand what you're seeing and not just do it for the purposes of, having your accountant do less work or just to have it there. You want to at least learn what it is that the statements are telling you. And then, of course, you want to avoid potential legal issues and penalties for evading taxes or commingling business and personal, because this can be very costly and it could really affect your business. A lot of times they go down, back quite a few years. If they see that, if there's a red flag in the IRS, or they just decide to randomly check to see if your business is really making what it says it's making. So you want to, always think of the long term and really try to be as transparent as possible in your statements and the way you do business. So in terms of getting a loan, because that's our expertise at Acción, the ways that the lack of transparency may affect getting a loan is it's your word against the lender. So a lot of times when a client is filling out an application, they'll put that their business makes $30,000 a month and all this, and then their pre-qualification is based on the information that they provided. But at the end of the day, when we ask for the bank statements, for example, we only see $3,000 coming in each month. You can say, oh, this is a real cash-based business, but that's really your word against ours. I mean, you could also say you made $1 million, but there's no proof. So we want to, you need to be able to prove what it is that you make. And if you can't, that doesn't mean that you can't get a loan, but it's really going to affect your ability to perhaps get what you're looking for. And the same thing again goes with taxes. A lot of times, you say you're making a certain amount, but you're putting a lot less into taxes. But we really do have to give that more weight because that's what you declared. And so that has a huge impact in our ability to lend you X amount of money. Consistent losses, for example, can be auto disqualifiers or major limitations. So for example, for major banks, typically they want to see at least 2 years of profitable taxes. So, if you've been operating a business for 5-10 years and you're still declaring losses, then not only does that kind of raise a red flag in general, by the way, with the IRS perhaps, for example, but also just, why would a lender feel comfortable lending to a business that's not making any money? Each month they're losing. Why are you even in business? Or what is it that you're doing wrong, if it is legitimate, that it's not producing a profit each year? Because the idea of, having a business is to make money. So what's going on? So if it is legitimate, you're not making, money still, then that's still, that raises concern. But a lot of times when it's a few years and they're still declaring it, it may be that the person is just is trying to avoid paying taxes, or, perhaps other reasons, but it can be an automatic disqualifier or limit the amount, in our case, for example, of what you can get. And then just back to how it affects you as a business owner, you risk making poor decisions due to lack of real data. That's concerning for the lender because it shows that you're thinking short term versus long term in terms of your business. And, you're not sure how much you're actually making and because you're not really providing the true wealth of the business for your own sake, it's going to be difficult for you to really know what areas is your business hurting in, because you got to look at the whole picture of what's going on in the business, because if you just kind of go day by day and put whatever you think benefits you, it doesn't give you a true picture of what's going on in your business. So it's really important, again, for your own sake, to be as transparent as possible. So specifically, when you think of financial statements, typically you think of the income statement, cash flow, and balance sheet, these type of statements. So just to kind of go over specifically what these mean, an income statement, also known as a profit and loss or P&L statement, is a summary of a management's performance as reflected in the profitability or lack of it of an organization over a certain period. So this could be quarterly, it could be monthly, it can be it could be anything pretty much, of an organization over a certain period. It itemizes the revenues and expenses of the past that led to the current profit or loss and indicates what may be done to improve the results. So this takes into account the revenues minus expenses, and that gives you the net income or net loss. Some of these things, for example, depreciation, that's not an actual expense, but that's kind of for the purposes of the tax write-off, completely legal, completely fine. But overall, what a P&L statement does is gives you an idea of the performance of the business within a certain period of time. So a lot of times, for example, a lender might want to see last year's P&L or January through, let's say, May 2018 versus January through May of 2017. So perhaps it's a slow period in your business. And so we may not be seeing the best of what your business does. Let's say it's lawn care or something. But we want to see if at least within that time period there still is growth or not. So we want to maybe compare period to period analysis of last year versus this year just to see. So this is definitely something that lenders like to kind of compare and play around with and see what's going on. But also this is something that should speak to you. So for example, a lot of times, business owners could be even more specific. So this may be a general one, for example, a general P&L, but within their statements, they may break it down to just music lesson income versus the merchandise sales in this example, and just to see what the expenses are just for the music lessons versus the sales. And you want to compare. Maybe within those records, you realize, you know what? The music lesson income is maybe less, but the margins are higher because there's not as many expenses, because there's no inventory, for example. And so you want to see if that's something that's worth maybe investing more into marketing. Or you may realize, music lessons is only giving me this amount and you're paying the instructor way too much. So you're actually not making money specifically, even though there's a profit here. But specifically with music lessons, maybe you're paying the instructor way too much. Maybe you're paying $6,000. So even though there's a profit overall, there's actually the loss within that. And so that's something you may want to consider. Is it something that's worth it? Or is it that you just need to market it more and maximize the potential? So these are the type of questions that you want to ask yourself when you look at these, and it helps you make decisions accordingly. A balance sheet is a condensed statement that shows the financial position of an entity on a specified date. So in this case, usually the last day of an accounting period. Among other items of information, a balance sheet states what assets the entity owns, how it paid for them, what it owes, its liabilities, and what is the amount left after satisfying the liabilities. Balance sheet data is based on a fundamental accounting equation: assets equals liabilities plus owner's equity. So in this case, for example, here you have whatever they have in inventory. For example, when they ended that year, that date, they have whatever they happen to have in the bank already, retained earnings, plus whatever from the previous year, whatever they made that year in cash, whatever they actually have, whatever they actually have at the moment, minus whatever they actually owe. So what the balance sheet kind of tells you is, in any given day, is what the business is basically worth in a raw sense, because there are certain things that are more intangible, like the brands of the business. But this is something, for example, that perhaps an interested purchaser of a business might look into a bit more than perhaps a lender, for example, because they want to know what it is they're purchasing. What is it that the business has currently at the end of the day? So if they were to purchase it, if you were to take away anything that they own, any loans or anything like that, you have to take that away from whatever they actually have: cash, inventory, anything that's prepaid, etc. So what is it that the company's worth in a raw sense again? Okay, so that helps kind of it's a base to determine the worth at the moment. A cash flow statement is a summary of the actual or anticipated incomings and outgoings of cash in a firm over an accounting period, a month, quarter, or year. So it answers questions where the money came or will come from, where it went or will go. Cash flow statements assess the amount, timing, and predictability of cash inflows and cash outflows, and are used as the basis for budgeting and business planning. The accounting data is presented usually in three main sections: operating activities, investing activities, and financing activities. Together, these sections show the overall net change in the firm's cash flow for the period the statement is prepared. So this is basically what the business has at the moment. What is it that it can expect to have at a given point based on, receivables, current cash, minus whatever is going out, especially soon. And this could help, for example, a business owner that may be looking into completing a major project. So knowing what they can count on, let's say next month, based on whatever they're working on, will help determine whether or not they really need a loan. If so, how much? So it helps, again, with budgeting and business planning purposes. It helps them determine whether or not this is a project that they can really afford. So when you know this, you're able to anticipate what your needs may be. Okay. So other kind of terms that you want to keep in mind, again, accrual versus cash-based accounting. So accrual-based accounting is when the financial statements are based on what the company has earned in, let's say, revenues, for example. So a lot of times, if you work with the government or something, you may not get paid right away, but the work is complete. And so typically, technically that's something that you've earned revenue, versus cash-based is when the cash is in hand. So it doesn't matter if you have a bunch of receivables coming, it's based on whatever you have at the moment. So, these both may look different depending on the type of business it is. one may be more beneficial than the other, depending on the type of business it's in, or the answers that you want to have. Other things that a lender, for example, will consider is bank statements. Do they match the P&Ls, taxes? Are there non-sufficient funds? So these are things that we want to look into. Is there a huge discrepancy between both? What's the reason? Is it because it's seasonal? Which is why a period-to-period analysis might be really helpful. Taxes, is there a loss? What's the reason? Does within that tax, the loss, is there compensation to officers that will help kind of mitigate that or make it a little more understanding? And that basically means paid to the owner. Depreciation. So perhaps you decided that year to depreciate a lot of the equipment, but we understand that that's not an actual cash expense at the moment. It's just something that you write off. So these are things that we take into consideration, or that were there major one-time expenses that were because you remodeled the year before, but that's not something that would typically be each year. Ledgers, invoices, and receipts, they may also be helpful, but remember, the higher the requested amount, the more formality and transparency is expected. So it's, these are things that will help you, enter in the information that's needed for the financial statements. But ideally, these are not things that the lender or other entities actually sees. That's something to help you complete it. But what we really want to see is the overall picture versus us adding and subtracting all that information. Okay. So this is just something I kind of put together here. In terms of all of this, I know it could be a lot, again, because it's a little overwhelming for many people. But so I put here: master your strengths, outsource your weakness, or do what you do best and outsource the rest. So this is something to keep in mind. A lot of this could still be a little confusing. But remember that there are software programs to plug in numbers like QuickBooks and many others. And so, or, you could maybe hire a bookkeeper if that's something that you can afford. There's so many ways to do it. And you want to also keep in mind that a good accountant is not the one who helps you evade taxes, but the one that helps you avoid paying unnecessary ones, create wealth, and helps you understand the data. What I mean by that is basically there are smart ways to avoid paying unnecessary taxes. There are retirement plans. There are, different things that will help you have money for yourself and your future, but doesn't affect your ability perhaps in the future to get financing. You may not think you need it now, but you never know what happens, what kind of opportunities happen in your business that requires you to have one. But because you haven't been too transparent, it's going to end up hurting you. So you want to make sure you, again, when you are transparent, but and find ways to pay only what's necessary in taxes, then that's in the long term, that's the better option. Okay. And you don't need to be an accountant, for all of this. Again, there are programs, you just plug in the numbers, but you do want to start understanding the data and what it means for your business currently. Again, you may be really good or perhaps the best, in your industry, in your area. You may be a really good cook, but you may not know that there are certain dishes, for example, that are not really selling. It's not really worth putting money there because maybe it's more perishable and you don't realize that you're losing money there. So these are financial statements, financial tools that are not just numbers, but really are saying something to you. They're speaking to you and you want to listen and you want to learn how to interpret them. That's what I'm hoping you guys get out of this, is that, again, you don't need to be an expert of what cash flow and balance sheets, how all that works, but look into specific programs or a good bookkeeper or accountant that helps you sort that out. it is worth the investment, but start learning what they might mean for you and your business, for your, to make the right decisions. Okay. I think I saw something like there may be here. Questions. Okay. David or Katie, I don't know, should I just start reading this and, oh, okay. This is PDF feature. Okay.
Okay, are you, okay, so this, you're at the end of
okay, I thought
the,
those were questions. Yeah, that was went quicker, I guess, than I thought.
okay. Thank you for the presentation. And at the Orange County SBC, that's our contact information. If you would like to schedule a private consultation, please contact us there. I mentioned that number before, 714-564-5200, or visit us, on the web at ocsbdc.org. We're still waiting for our attendee to have some questions, but I'd like to have some questions for you as I work with, clients day in, day out, and they like to know if Axiom actually can find funding, access to capital for startups, and how difficult or how easy it is to get a startup loan. Could you address on that,
Sure.
Jose?
So the only time, David, were you going to say something? Oh, then I heard. Okay. Sorry, someone saying something? Okay, maybe not. So the only type of startup loans that we can do is if someone has outside stable income, meaning, it's verifiable, it's not like commission based, it's, stable income for at least 6 months. And they're looking to open up a home-based business. Okay. So it's, and that's up to 10,000. Other than that, you have to have at least 6 months operating. So even if you're purchasing a business, you have to have been the owner for at least 6 months, operating it for at least 6 months or more. And that would be considered a loan that we can potentially do. So the only types of pure startups that we do is if it's home-based and you have outside income. Otherwise, at least 6 months operating or more. How difficult it is, so for most lenders, including us, our highest delinquency is these startups, even though they're just 10,000. The reason is because it's kind of a chance that we're giving the entrepreneur based on what they feel they might make. But it's based on their business plan and their cash flow projections. But anything can happen. There may be certain things that they didn't really take into consideration, or it's just, and there's no track record. So there's really no way for us to know how well this person will do. And it takes time a lot of times. And so a lot of times a big error is that people, when they're in this situation, they feel really confident, which is great, but they leave their job perhaps too soon. So that's something you want to, make sure you think about before, doing that. I always suggest that the person, if you really feel that the business is at a point where you should leave your job, then pretend that you're not depending on the personal income for a few months, and just not touch it and see how that would go for you. So those are the type of loans that we can do in terms of startup.
Okay. Is there a FICO score specific that you're looking at, like 640 is the average, or a minimum? 575. That's really
minimum
good.
575. I can send you a fact sheet, so you can perhaps, together with the presentation, you can send to the attendees.
Okay. Kathy has a question in asking for the presentation email to her. If any of you listening and would like to have the, okay. Thank you, David, or Rose. She has a question. Okay, Jose, do
Yeah,
you
I'm
see that
reading it.
question?
Yeah, yeah.
You're
As a
reading it.
supplier
Okay.
of industrial materials, you recommend certain financial ratios that I should be more aware of. Example, inventory asset turnover, current ratio. Um, I wouldn't be able to answer that question precisely if there is even an actual answer to it. I'm not an accountant, but um, but I think the inventory asset turnover, I think that is definitely something you want to be aware of. But it also depends on what it is you're looking to do. I mean, if you're what you're looking to see is getting a loan or a specific project that you have, or deciding which materials are really worth keeping. Maybe keeping them in stock is costing you more because of the size, and perhaps it's not worth it. So it really depends on what answers you want um, to be asked, but I wouldn't be able to tell you exactly which one might be something you want to be aware of versus another.
Okay. I have two questions for you. I was just asking about, Kathy Lucas asking if she can get the email of the presentation.
Yeah. I'm
We
sorry.
can
I
make
thought
it.
you were gonna.
Yeah,
think,
I mean, we can do that.
okay. Mm-hmm.
So any of the attendees listening to this, if you'd like to have the presentation, we'd be more than happy to email them to you. Is one. I have another question asking how much capital we need to back the. Okay, I think the question is how much capital do they need if it's a startup business that they need to back up or to
Yeah.
put down payment maybe. That's the
So
question asked.
for us, there's no, you don't need anything. Obviously, it's great if you do have some kind of sweat equity, but it's not a requirement. It's what we're really seeing is whether or not your current income of your job is able to afford the loan plus whatever else is going on in your personal expenses, because we don't expect you to make it away. But obviously, if you have savings, that's a huge plus because it shows you at the moment have been financially stable enough to be able to save X amount. So, but there's no specific requirement. I see another question here from Rosie. Are there ratios that the bank pays more attention to that we should be paying attention to? Well, for us, for example, what we look at is the coverage ratio, but we look at not just the business income, but also any other income you may have on the personal side, and also the business expenses and personal expenses as well, because these are small businesses, whatever is going on in the personal side is taken into consideration as well. Our loans are business loans with a personal guarantee, as are many loans out there. It's only when you really get into the huge, $1 million type of deals where what they're just looking at is the business and business credit and all that. But that's something that we definitely look at. And so, yeah, for us, we look at the coverage ratio to answer your question.
Okay. Okay. Another question for you. Is there any industry specific that Axiom prefers over others? Say, building a restaurant from scratch, or a professional, offices like a pharmacy, a dental office, a doctor office. Do you have any preference over
Not
those?
really preference, but it's some that we can, some that we cannot. So, for example, we cannot do any startup. So, no restaurants from scratch, no anything from scratch unless it's home based. Again, you have to have at least 6 months operating. In terms of industries that we do not lend to, is anything that's related to real estate or dependent on real estate in any form. Property management, etc. other gun manufacturing type of businesses. What else? Oh, multi-level marketing, like pyramid schemes.
Yeah. Yeah.
Yeah. So those are industries.
Okay.
So.
Okay. Okay. Do we have any more questions from our attendees today? Well, I have another question. So you do working capital loan, obviously, to support any existing business in terms of using that working capital for hiring, for marketing, to grow their business. Do you also do equipment loans, for a salon, for example, to get more chairs in their salon?
Yeah.
And okay,
Yes,
that's good to know. Okay. Is there any questions from our attendees that you'd like me to address or raise it to Jose so he can address it for us as a group? I'm looking at the Q&A and I'm looking at chat features here, and I don't see any a question. Do you have accountants that you refer? Yes, Kathy. We've worked with numbers of networks that have accountants that we work with, and we can refer to you. Please contact us. And maybe you might want to schedule a private consultation with us, and so we can get to know you a little bit better. We can get to know your needs a little bit better, so we can make that referral more wisely for you. I hope that answered your question. You're very welcome. Is there anything else from our audience? Before we let Jose go, I know he's from the back east. He's from New York, so it's way past his noon time.
No worries.
If we have any more questions, we have the last 10 minutes. If you have more questions, we'll be more than happy to address those for you. Or else I would encourage you to call our number 714-564-5200 to schedule a private consultation with one of us at the SBDC, so then we can get to know you, get to know your business, and so we can either referral or assist you better. Okay. At this point, I don't see any more. Okay. Yes, Rose, I will make sure the office will forward you the presentation today. So I have Kathy and I have Rose requesting for the presentation. At this point, thank you so much for attending our webinar today on understanding your financial statements. Thank you, Jose, for taking the time out to do this, to help us understand our financial well-being better as a business owners. Thank you very much. Hope to hear or see or meet with you soon.
Thank you, guys. Thank you, everyone.
Thank you.
Bye-bye.
Bye-bye.